almost a year. All right, we're starting the live session today with LC. Go for it.
Good morning, everybody.
Mm.
My question, Nick, is directly to where exactly do you predict?
Bobby, or you
Um,
bring your earphone, come.
Excuse me?
Sorry, that was no sock here. I just muted him. If he does it again, I will remove him from the call. Can continue.
Okay.
Sorry.
So we've always heard in Forex that don't get in front of a trend. Currencies trend tend to trend very well, and it's like falling. It's like catching a falling knife. You've mentioned something before that you said you don't really look at past supports or resistances because you can validate anything from behind. So I'm wondering if you can give us a bit more feedback as to exactly where you pick the points that you decide where the pair will turn around. Thank you.
Yeah, you're welcome. So, two things here. First, let me just answer your last question directly. How do I determine the points? All experience. If I think price goes to one location, I get a quote unquote feeling, right? A little tickle inside me, and I'm like, yeah, this looks like it's about to reverse. That's simply it. Where is this? Sometimes support resistance zone. Sometimes when price makes a new high, I sell. Sometimes it makes a new low, I buy. That's the first thing. It's the first very simple answer. It's just experience. The more you do it, the more you start recognizing things, the intuition part of your brain that cannot reason and cannot articulate verbally or communicate it, that part of your body will know why. That part of your brain will know why, and you won't be able to really explain it, but you will know, like, yeah, looks like a good spot to enter, even though it may not make sense from a rational perspective or a logical perspective, and you may not be able to provide reasons. However, you will know nonetheless because of the experience. That's the answer. The second portion I want to touch on is whenever you say trend, what the fuck do you mean? Try to explain it to me right now.
So for me, a trend is a position that just keeps going in a single direction without bouncing off to clear levels, as opposed to ranging.
Name a chart right now, any currency pair.
Um, Hang on, I'd have to get. I'm not connected up to trading you at the moment, but
Okay, we'll just use Euro CHF. What would you say this is, an uptrend, downtrend, or range?
hang on, I'm trying to log in.
No, just
Um,
look at my screen. I'm sharing my screen. Just look at my screen.
okay, that's definitely a trend.
Oh, it is definitely a trend. What is it? What kind of trend?
Uptrend.
Uptrend. Okay, well, here, let's go to the 1 minute chart. What would you call this, man? Is this a uptrend, downtrend, or range?
No, definitely on the 1 minute. That's a range.
Wait, hold on. Hold on. I thought you just said Euro CHF was in an uptrend. Now you're telling me it's in a range?
Okay, I can explain that. So depending on how long I want to keep my position open. So depending on my price target. So if, for example, if I'm looking for a target of 100 pips, then I need to look at a scenario where those 100 pips will be relevant in terms of range or trend. So I can never look at a 100 pip target on a 1 minute chart. So if I'm looking for a 100 pip target, I'm looking for higher time frames.
Okay, fair enough. Let's go to the monthly chart. What would you say this is, man?
That's a downtrend.
Okay, sweet. So, do you see what I've tried to illustrate with this example?
Yeah, yeah, yeah. But again, I mean, the monthly would I would never look at 100 pips on a monthly.
So, what you're saying and for what you're insinuating is two things. Number one, trend is really fucking subjective, and number two, the context matters. Is this what you're saying?
I would say subjective. I would say it's relevant to my price target.
Your price target is subjective in and of itself, correct?
Um, isn't well, if it's a certain number of pips, wouldn't that be highly objective?
Well, why is it a certain number of pips? Is that not something you've subjectively defined that you're just claiming it's objective to you based on your subjective preference of how many pips you're targeting?
From what I've understood, you define to take profits at a previous level of support or resistance. Is that correct?
Is support resistance not subjective in and of itself?
Well, yeah, you can go there. Yeah.
Do you see the point I'm trying to make?
Yeah, okay. I can see it from your side. Yeah, I can.
You see it from my side because it's fucking true. We went to the 1 hour, you're like uptrend. Went to the 1 minute, you're like range. I went to the, what was it, the 1 month, you were like downtrend. trend is fucking subjective and it's highly contingent upon the context. Context meaning how much price data are you looking at? How far are you zoomed in or out? What does your brain recognize as an uptrend or downtrend? Everybody's going to say something different. So I use all this to illustrate the highly complex, nuanced nature and ultimately extreme subjectivity of what it means to say something's in a range. Because one of the first things you said with your question is you're like, isn't it like, common knowledge to like, don't fight the trend, this and that? Well, here's the thing, the trend's fucking subjective to begin with, which is why I don't even bother playing all those mental gymnastics. Instead, I just let my experience dictate, like, yeah, this looks like a good time to sell. If anybody else is saying, why are you selling at support, bro? Or why are you selling in an uptrend, bro? Or why are you selling when the EMA crossover candlestick Wagyu beef bullish bearish steak candle? You know what I mean? Like this is why I don't even look at any of that because it's all subjective to begin with, and it is ultimately just based on your experience through intuition. That is the only thing that makes a manual approach profitable in trading. Unless you're using automated or quantitative strategies, sure, you can objectively define terms and conditions for trades. But when you're a manual trader, like me and you, it's all based on discretion, which is ultimately subjective. Do you see the point I'm trying to make?
Yeah, yeah, yeah. But you do base, how do you base your take profits then?
I base my take profits on dragging them with a one-to-one risk reward ratio from wherever the invalidation is.
All right. Okay. I mean, I've only been here a few weeks, so um, I need to keep looking at what you're doing. All right. Thank you very much.
Yeah, no problem. Good questions.
Thank you.
Next up, we have Felix. Go for it.
Hi, Nick. Thank you for letting us be here. I have one question. We can ask questions about current charts, right? Because, for example, I took now a trade, for example, of um, Euro USD and GBP JPY because for me it seems like almost the same as in the trades we are currently in. Prices overextended and is likely to reverse in some point. For example, also in euros and Euro USD, it started to make on the 1 hour frame. It started to make lower highs also. And I want to ask you, of course, you say everything is about your feeling, but why aren't these setups you choose? What is your feeling telling exactly? You know what I mean?
I'll answer it directly, then I'll provide the context. The direct answer is because I don't see any trades that I think are likely to work out. All I see really is a range. When price is ranging, it just becomes a real pain in the ass because you can play mental gymnastics and you can use your verbal labels to kind of like say it could go anywhere. You could say, look, it's at support. So it's going to go up from here. Or you could say, look, it's making lower highs, so it's going to go down from here. When shit's in a range, it's just less likely to work out. Whenever you wait for price to have a clear extension one way or the other, it is more likely to revert. Therefore, I only wait for trades like that. So that's my simple answer is because I don't see anything. Now, the reason behind this, right? I want to highlight how difficult it is to try to provide an explanation to assert the negative. So, for instance, where do you live?
Uh, Mauritius right now.
Where?
Mauritius.
Which country is that?
It's besides Africa, Seychelles, Mauritius.
Okay, so it's in
It's
Africa.
East Africa, East Africa.
Okay, so you live in East Africa. Let me tell you this, man. Why don't you live in Russia? Why not, bro?
It's
You see what I
cold in
mean?
Russia.
That's what I'm saying. Like, whenever somebody asks you why not, why don't you do something? Why did you not take that trade? Why are you not in Euro USD? Why did you not sell GBP JPY? It becomes very difficult to answer an assertion to the negative. It becomes easier for a person to provide sort of a rationalization or their perspective on why they did do something. But when you start asking like people like me, like Nick, why didn't you trim your beard a little bit shorter? A lot of it just comes down to, oh, I just didn't really want to. So then it becomes very difficult to provide like a good answer. So the only reason I did that was just to provide context as to why like it's difficult to answer like why didn't you take a trade? Because the answer is always typically going to come down to some boiled down vanilla bland version of well just because I didn't see a trading opportunity. And that is just all based on experience. So continue to get the experience and then you too, my friend, will be found
Mm.
you'll be stumped when someone is like, "Hey Felix, man, why didn't you take that trade? It was a good trade." You're like, I don't know, bro. I just didn't see a trade there.
Maybe we can also just look because you looked on your Euro USD, maybe for a GBP JPY, because when you zoom out a little bit more, it's like I said, it's the same as where we're in right now. It's yeah, it's overextended, right? And uh,
I'm waiting on 206. When price goes far past the highs, that is one of the characteristics that I will use to say that it's quote unquote overextended, which overextended is a completely subjective term as well. So that is when I will consider it to be quote unquote
mm-hmm,
good enough to trade. Right now,
mm-hmm,
it's just at
mm-hmm,
right now it's just at the previous high. If I were to
mm-hmm,
here, the risk structure would look something like this, right? So even if my stop is all the fucking way up here and my target's down here, well, I mean, guess what, bro? Like GJ's kind of been going up more or less with higher highs and like so higher highs and higher lows. If I'm selling right here, price could just go up against me, hit my stop. I'll lose fucking 50 grand or God knows how much. And then that would kind of be a stupid thing to do because then once it makes a new high, that is the most likely area it could revert. And then I could just sell
mm-hmm,
again. But then if I sell and then win that, I'll just make back what I lost. Then I break even. I'm not here to break even. I'm here to wait for the trading setups that I think are very likely to work. And right now, I just think it's less likely to work. I think it's more likely to make a higher high. That's what I'm waiting for.
Or I can do it like NZD CHF when we do it like this and extend the stop loss then when it's going against us. Not starting then with the initial risk like 50K in your case, only maybe starting with 20K and then maybe extend the stop loss when it's going against us.
That's one of the ways to manage the risk structure. That is why I pre-plan the max risk before the trade, and I'll generally stick to
Mm.
90% of the time. There are some times where I've increased the actual amount of invalidation risk depending on what I'm comfortable with, but as you've seen, and as I yell from the top of the mountain, it is truly a subjective thing. When it comes
Yeah.
to this, I'm currently in a 20K 30K max risk right now. I think it's like 28 grand. If it goes up to here just before 57. However, my max allocated risk when I called this out a week ago, I said was 50K. So that gives me some room to add positions, manage, increase the stop loss and validation distance. What I'm doing is I'm going to wait to see how price reacts to 0.565 if it can get here. If it looks like we're going to keep sweeping past it, there's a number of things I might do, all of which I'll just call out live in the next trades group, as I always do. However, for this right now, it looks fine. It's way overextended in my opinion. I think at any moment it's likely to reverse. So I'm not doing shit, man. I'm sitting here. I'm smoking weed. Just kidding. I'm just waiting for it to work out.
All right. Thank you very much. Thank you.
No problem. Great questions, Felix. So we currently don't have anyone else's hands raised. So what I'm going to do is I'm just going to chill here and wait. If y'all have a question, we've got 60 people on right now. Normally we'll end up having like 100 to 120 people on the call. Y'all just remember, if you have a question, just click the option to raise your hand, and then I'll call on you. Your call will be answered in the order it was received. And up next we have Dre. Dre, go for it.
Good morning, sir. Um, my question was during that recent losing streak, like at the beginning of the year, at the end of last year, um, when the group was still like MFX close groups and all together, you can you explain any circumstances or kind of like what was going on to contribute to those losses and why you made these radical changes that led to like the betterment of the group and these amazing profits that you've had over the last little bit.
Yeah, so first question answered directly. Why did the shitty market conditions happen? I don't know. That always happens. I averaged 2 to 3. Last year, 4 down months every year. So 2 to 3, but with the exception of last year, it's 2 to 3 down months per year. Down months, break even months, just months where I don't really make a profit and I lose a little bit of money. Why does that happen? I don't fucking know, man. It's something that has in fact happened for the past over 6 profitable years of trading. What I've learned to do is just accept it and not try to rationalize it because no matter what I do, you gotta understand there are hedge funds that have periods of years where they're losing before finally having huge win streaks and making it all back and then tons more. If I have a couple down months per year, I'm good with it. It's just a part of the game. Why does it happen? I don't know. Just to answer your question candidly, honestly, and openly, I don't know. But they do in fact happen. Therefore, the only way to get through them is to control risk. Now, the second portion of your question, which is Sort of, you're essentially trying to get me to talk about what caused me to sort of like reshaping things in such a way that they're like fucking amazing now. Is that kind of more or
Yeah,
less what you're asking?
yeah.
It happened whenever I realized that 100% of the significant profits on my trading accounts that actually get the accounts to the growth target, whenever I was using the DCA, dollar cost averaging, grid recovery trading, so adding in drawdown, sizing small for the first position, betting on the metrics that the final stats will play out, like within 4, 5, 6 trades, I'll have a profitable outcome. My biggest winning trades came from shit that went way far in one direction against me and resulted in a lot of drawdown before I added a bunch of positions. Then it came all the way back and end up making a huge profit on it. Or, like, worst case scenario, I would usually just break even. So because I knew that 99% of the time I would either break even or have a profit, it worked really well. The only thing is I just noticed like there would be those huge drawdowns of periods of time where like you get into a huge long drawdown, you're waiting, waiting, waiting. Then it finally reverts just to come back for break even or in some cases a huge profit, depending on all the specifics of the trade. When I noticed that, something dawned on me, a little bright idea. I asked myself, I'm like, what if I just waited for that to happen first? I can't believe I hadn't come up with this idea in the past 2 years because it's been happening for the past 2 years. So like, what if I just waited on that to happen first for price to go really far in one direction to the point where I'm like, this is painful, man. This is about to reverse at any moment now. And then instead of having entered one standard lot, then two standard lots, then three, and then now I'm in like 15, 20 standard lots. All of them are in drawdown waiting for it to reverse. What if instead of that, I just waited for it to go really far in one direction and then I entered that sort of similar position size but right there at the crux of where I thought it was likely to reverse. So instead of adding all these positions, I just do like 120 standard lot position, risking, whatever it is I'm comfortable with, 20, 30, 40, 50, 60K. And then I let that stat play out. Two things occurred to me. Number one, I would trade significantly less and have significantly less margin capital and stress tied up with trades. And the second thing I noticed is that I can make big bets on those because trades like those are very likely to revert. Again, with my DCA system, like 99% of the time, the shit would end in like, small loss or a break even or a small profit or a huge profit. There generally weren't any big losses except for maybe like a small percentage of the time, right? Like 1 to 5% of the time. And so what that told me is that it is likely to have a very high win rate if I wait for that. So I thought it through. I looked at a bunch of the other trades I take. I looked at the wins, the losses, the shit that played out. I modeled it in back testing for like over 20 back test scenarios, and I've done a lot more since then. It had a 65 to 70% win rate with a 1-to-1 risk reward in back testing without fucking with the stop loss or take profit. No order modifications whatsoever. Had a 65 to 70% win rate. And then in live forward testing, so far it's had like over a 90% win rate in like live trading, which is fucking insane. It's the first time in my trading career something performed better in live trading than it did in back testing. So because of all those reasons, that's opted me to make the changes I have. It's simpler, it's more efficient, it's more effective, it's more profitable, the win rate's higher, and I feel like more of a badass. Does that answer your question?
Um, the first part, yes. The radical changes I think you were talking about are it's specific to trading. I was wondering if like there was anything going on in your life that was causing these trades, but you said no, it's just part of the game and you got to deal with it by risk managing. The other part of my question was like you decided to split the groups up and make some crazy changes to the group, and immediately after you did that, you started being profitable again. So I was wondering if like the way you were trying to explain your trades was like affecting your trading and it was kind of being restrictive, and then you went to an intuitive based trading, and then after that you were back on back on the horse per se, and doing a lot better. So that was kind of like I was asking more of like the changes to the group as well, and like kind of like those in, does that make sense, or am I being a little confusing?
But you're essentially asking like why did you move calling your trades from close friends into a separate product? Is that what you're asking?
Essentially, yeah. But yeah.
Yeah. So the answer is because I felt like it. Now, why did I feel like it? Time out. Why did I feel like it? It's because most people were there for that. So I wanted to partition like just the people wanting to follow my trades for like a small fee, which I'm gonna try not to laugh with $250 a month. I understand is a big fucking price for a lot of people, so I'm not trying to like downplay that. But then again, I'm somebody that like literally the past couple months I made like $180,000 trading. It has to be worth my time if I'm gonna spend time like talking to people, answering questions and shit. So I raised the price of close friends to $1,000 a month, and people who are in there who want my direct help, it's gonna be worth it now for me to do that. Everybody else who just wants to follow my trades, it's no work. It's just me doing the shit I've been doing for 6 years, just calling trades out. So that's why we partitioned it into Nick's trades. And what's hilarious is I was right, and I was more right than I ever thought I would have been. In the Nick's trades group, we have almost a 75% renewal rating after the first month, which is crazy. In close friends, I think it had like 60% of people would cancel after the first month. And then 40% of people would renew, and the average amount of time they would stay renewed in close friends when we were doing it that way was about 4 months. So like $1,000 in revenue from a client who stayed. In Nick's trades, all like 3 out of 4 people remain subscribed after the first month. And we've had most of the people who are there right now have been subscribed since I started a couple months ago. It is just very abundantly clear that for whatever reason, I think they're pretty obvious reasons if we're just being like objective. For very obvious reasons, people want to see the way that I trade and they just want to see that live, and they don't really give a shit about a group chat. They don't really give a shit about seeing a lot of the reasoning. They just want somebody to share their trades so they can see the trades they're taking and follow them. That is just simply what most people care about. So I'm happy it's in a new product. It worked out better than I originally planned.
Okay, that makes sense. Thank you.
Yeah, no problem, man. Go Wayne, you're up next. Go for it. I hope I'm saying your name right. Gawain, you may unmute. Your microphone is unmuted, so I can't hear you. So perhaps there's something with your audio or connection. We'll just wait here for a second. Hmm. All right. Well, Gawain, f feel free to just speak up if you can get the microphone situation sorted out. It seems like it might be like microphone issue or whatever. With that said, while you're getting that sorted out, Gawain, anybody else who has a question, click the Zoom option to raise hand, then I'll call on you, and then we will go over that. I've already shared all of my analysis for today. I've already shared my plan with you guys in the Knicks trades group, and I've also shared just the regular rest of the analysis here in Telegram this morning. So I don't really have anything else to go for today. It's going to be a pretty simple trading week. It's just a matter of letting everything play out. So yeah, so I don't really have a lot of, entertaining stuff to bring you guys today. I tried to do all that this morning in Telegram. Okay, cool. Well, I'm going to sit here for another minute, like another 60 seconds. If Gawain gets the microphone working, then we'll continue. And if not, if there are no further questions, then I will hop off and continue with my day. Remember, we get these calls once per week. If any of you want to have a question, pop it on. I'm here to help. We will wait another like 60 seconds. I'm sorry, Gawain. I'm sorry your microphone's not working. Yeah, I saw your emoji reaction. I wish it was. I would come over there myself and help you out. Hope you get your microphone set up. Give you a nice little microphone. LC, go ahead.
Hello again. Another question which is parallel to trading. Which is the best or most efficient way of dealing with it in terms of tax? So is there uh yeah. Is there a way that you can maybe pay less? Have you found that, I don't know, give me your feedback, please.
Woo. I feel like you're a IRS auditor over here, seeing if I'm gonna
I'm a
crack.
dentist. You're safe. I'm a dentist.
So two things I can no longer make any comment about is anything related to taxes or brokers. So as frustrating as that may be, as much as it took the courage to step up and ask a question, I can't help with anything about that. The only thing is there's a lot of like compliance and legal issues as well as privacy issues that can occur if I say anything about like taxes or brokers. Every now and then I might throw some things out, but since this call is being recorded and since it's going up on YouTube, I'm gonna just elect to not say anything because I don't want to increase any liability on my part, and I'm sure that's understandable.
Okay, fair enough. Thank you.
Yeah. I do always suggest the vanilla bland advice like seek a licensed financial services provider before trading in the forex market and seek a licensed tax professional to help you with your taxes and stuff because Honestly, it's going to vary depending on where you're at, where you live, what you do, what your tax situation is, whether or not you're trading through like some sort of LLC or corporation versus personally. There's so many things that affect it. It's just best to have a CPA do it. Like, I don't even fucking know half of that shit. I know maybe like 20% of it, but even then, how would I know how much I know? Because there's so much that I don't know. So I probably know like a microscopic amount. All I do is I give everything to my CPAs and they handle everything. That's the best way to do
Nick,
it.
can you hear me
Yes.
now?
There you are. I'm happy you made it. Sweet. All right, you're here.
Fuck, I was stressing, man. Okay, thanks. I'll be brief. Um, I know in the US you obviously can't hedge. I know that there's a workaround, obviously, with the two accounts and all the rest of it. Um, I'm watching the NZD CHF with great interest. And what I sometimes do is because I'm trading largely on my mobile, on my app. What I'll sometimes do is I'll take like a 0.01 in the other direction so that it's very easy wherever I am just to check direction of where it's going up and down without me having to look at a chart, without necessarily hedging the whole thing at 50%. I'm just wondering if you had the opportunity to easily hedge without having to go through the whole fucking mission, would you ever do that? Or would you just go, fuck it, it's not doing what it is. Those are my rules, cut the loss, go back in. Because obviously with hedging, you've got the option to hedge percentages as you go. And I'm making a little bit of profit on the wrong way now, which can help. Yeah, that's my basic question.
I didn't understand your basic question. Could you re-ask your basic question in one sentence?
Would you hedge if you could, if it was easier?
No.
Okay.
Yeah. And the simple reason for that is like hedging is good as a risk structure if you're going to do everything on the same account and keep it simple and stuff. If you're trying to trade with a US broker through all the regulations, FIFO, and all this shit, anti-hedging laws, it just makes it more of a pain in the ass. Here's the mechanism of what hedging actually does, right? It is no different than closing the trade at a loss in practice. And here's why. Whenever you hedge, you're entering an equal and opposite position, but you're essentially taking the loss, but it's just in your open terminal. Whenever you close the position at a loss, you're still taking the loss, right? You did an action, you did something to stop the loss, whether you used hedging or whether you just closed it. You stopped the loss. Now it moves from your open terminal into your closed terminal. The main benefit in hedging is nothing practical and nothing like objective, like worth value. It is simply a psychological benefit. Why? Whenever a trader hedges a position, they don't feel as though they've taken a loss. It's quite the fucking conundrum. It's really a paradox. It really is. You don't feel that you've taken the loss. You feel as though the trade has just paused and I'm just waiting for it to go somewhere new. And then I'm going to manage it. And I know, maybe a good percentage of the time, depending on what your stats are, a good percentage of the time you'll be able to get out of everything in a net profit, even having sometimes made profit on it going the other way. Then the idea of hedging is like you wait for price to move to somewhere new where there is a new trading opportunity generated, and then you participate in that new trading opportunity to then quote unquote roll out of the hedge. There's nothing fucking different than just closing the trade at a loss, waiting for it to go to the new area, still taking the next trade, and then hoping that you make a little bit more profits and you lose long term. All of it works the same way. Hedging versus closing the trade at a loss, there is no difference in practicality. It is the same fucking thing. It is just a psychological benefit for most traders because they feel as though they haven't actually taken a loss. Therefore, that doesn't impair their future trading decisions and make them make emotional decisions as much as what I've seen from people taking one, two, three, four, five losses in a row, trying to tell themselves like it doesn't bother them, but it does. And then they're like, oh, fuck, I'm so worried because I've had multiple losses. Hedging is just kind of a more dynamic, sort of mentally easier way to sort of take the loss and wait for the next trading opportunity. So that's what I have to say about hedging. What's your response to
Make No, that makes perfect sense. I understand completely. And now that you've explained it, yeah, it is purely a emotional fucking, I don't want to lose shit. It's
that?
the
Yeah.
same thing. Perfect sense. Perfect sense. Thanks so much for letting us join this.
Yeah, no problem, man. Glad you got that mic set up. We have Space Monkey up next. I love the name.
Hey Nick. So pretty much is your strategy the same concept as that giant as wick candle on the New Zealand dollar Swiss franc? So what I did was I sold that and I closed it at halfway. And I've saw that the same thing on GBP CAD, and I did the exact same thing. So it's kind of like a quick scalp.
Well, brother, we need a lot more context than that. What is your question? Do you have a question?
So like, is there any problem with like just shorting just that giant ass wick candle? Yeah, that from the top.
The answer is no.
Okay.
But that's not very useful for you because you could say that about any trade. You'd be like, you could be like, I'm gonna try to do my accent here. It's gonna suck. You'd be like, mate, would it be a good idea to sort of like buy the pullback during an uptrend, mate? Would that be like a good call? And I'd be like, no, it's not a bad idea. It's fine. But you could say that about anything. So here's what matters. There's two things that matter before anyone should take a trade ever in their whole life. One, do you think price is likely to go up or down? There has to be a yes or a no. And if the answer is yes, what? Is it up or is it down? In this case, you thought yes.
It's just like one whole candle. So I'm thinking it has to go down at least halfway. So I'm thinking I'm not crazy, right? Just for shorting this, just for like a quick scalp, if that makes sense.
You're not listening to the structure of why anyone's going to take a trade ever because this will apply to that. What you're talking about is something specific, which is why you took a trade, which doesn't fucking matter because it's going to be different for everyone. What I'm saying is for every trade that anyone will ever take, two things must be true, in my very humble opinion, not financial advice. The first thing is you have to have some sort of a feeling about that you think price is going to go up or down. The reasons do not matter. You can say it's an uptrend, downtrend, it's too high, it spiked up really quickly, and I think it's likely to go down, so I'm going to take a quick scalp. Whatever the reasons are, doesn't matter. But you must have an opinion on whether or not you think price will go up or down. That's the first thing. The second thing is you must do it with controlled risk. You can use risk structure with just a stop loss. You can risk a certain amount per trade. You can decide to like hedge. You can decide to DCA and add positions in loss should it continue to go against you at predefined levels, knowing what the risk is all the way up. There's multiple ways you can do it, but you must have an opinion on price going up or down, and you must control risk. You did that for this trade. I'm assuming you entered this trade because you thought it was going to go down. That's fine. Your reasoning doesn't matter.
Yeah.
And I'm assuming you controlled risk. Could you explain how you controlled risk?
I just had the stop loss pretty much above where, yeah.
Gold star for you. You get a gold sticker. I'll send you a gold sticker in the mail. Yeah. But that's really it's that simple. Like you will only take a trade ever if you have an opinion on if you think it's going to go up or down and if you participate in that trading idea with controlled risk. That's all that matters. The actual reasons and specifics like it spiked up with the candlestick close 25% of a bearish wick on top, so that means that the liquidity might turn to the downside. All of those are just it just depends on intuition and subjectivity and your experience trading. But is that trade fine to take? Yes, of course it's fine. As long as you think it's going to go in fact one direction or the other, and as long as you're controlling risk. The rest of it just comes with experience. You'll start to be able to have a better sort of trade selection mechanism, that skill set to determine what trades to stay out of, what trades to take. There's nothing wrong with what you did.
Okay. Thanks.
Yeah,
That's about it.
sweet, man. Did that answer your question or was that bullshit?
No, it's like when I was in the trade, I'm like, I think this is gonna go up because I don't think this is the top. But so I was thinking I was partial the bit each way it goes went down, and I saw the giant wick candle, and I'm like, I could just short this, and I could even protect my position. So it's kind of like a win-win either way. So yeah, you kind of answered my question. Thanks, Nick.
Perfect. Very nice. No problem. All right. I don't see anyone else with their hands raised, so I'll go give it another 60 seconds. If we don't have anyone raise their hand, no more questions, we'll hop off. And if somebody does have a question, just raise your hand, I'll call on you. And I'll wait. Mohit, go for it.
Hi, Nick. This weekend I was looking at your previous videos, like the ones that you made many years ago with Trading Nut, I think. And I was listening to one of your podcasts with him, and you were talking about how you were risking very low amounts of money on a trade and um, trying to make like high multiple profits, like 1 to 20 or 1 to 30. I mean, at I want to ask, like, what's your opinion on that era of Nick Shawn? I mean, how
Mm.
you transition from that to now just waiting for trades and essentially going for a 1-to-1 rather than going for a 1-to-30 or 20 or 15 like that.
So what's my opinion on that era of Nick Shawn? It is the same as I hold the opinion for any era of Nick Shawn. Nick Shawn has been a work in progress his whole life, more specifically and more aggressively the past 8 years. Nick Shawn has been a constant evolution of this bald man yelling, trying to figure out his life in trading and in business and in personal life and self-betterment and health and everything. So in that era, right, that we're talking about is specifics here. Like my risk reward was much bigger. If I was right, I would make like 20, 30K, but if I was wrong, I would lose maybe like 500 or 1K, whatever it happened to be. Now it's like, sort of the same idea, right? If I think it's going to go up, I'm buying. If I think it's going to sell, I'm going to go, if I think it's going to go down, then I'm going to sell. But the risk structure is just a different mechanism. So it's like just risking high dollar amounts on outcomes that I think are very likely to occur. My opinion on that era, though, is like, yeah, that's my past self. I respect it. I was growing as a person. I was growing as a trader. I've continued to become incrementally better year after year, and I hope to have a continued progress of doing that. What do you think?
Yeah, it's great because I was just going to the wormhole of your YouTube and just looking at the older stuff, and I just saw that how much you have grown over time, and I really respect that. And yes, that's all I was asking. Thank you.
Yeah, thanks, man. I appreciate that. I hope you continue to grow over time as well. I think growth and self-betterment is amazing. I think that plateauing is very sad and unfortunate. So anybody who's constantly trying to become better and better, there's no there. There's no end target. There's no end goal you're going to reach and triumphantly jump up and down because the moment you become better, you then ask yourself, how could I become even better? And then you end up just becoming quote unquote subjectively a better person the rest of your life. I think it's very important for everyone to like do a lot of self-development regardless of what the specifics are. You could be a better spouse, you could be a better father, you could be a better mother, for our females on this call. You could be a better person. You could be less of a dick to your coworkers. You could be a better boss and not be so condescending and arrogant and patronizing to the employees that work for you. You could be a better trader. You can control risk better. You can go to the gym a little bit more. You can stop eating bullshit. You can start eating way healthier. There are so many things that we all could do 24/7 to become better. The only problem with this is that society oftentimes views you as a flip-flopper. You are often stigmatized for changing your mind. We live in a world where people really value consistency. They value consistency over truth, over objective reality and objective, honest truth, over someone being candid and saying that they were wrong. That is not valued in society, and it's very unfortunate. I like people who are right a lot. And to be right a lot, you have to change your mind a lot, in my opinion. The only way you're able to change your mind is by challenging your most deeply held beliefs and asking yourself, is there merit to this? Am I viewing this right? Am I reanalyzing the situation? Is there new evidence? Is there new data? Is there new reasons or logic and rationale that could provide me a better way forward as compared to what my beliefs and actions are right now? If the answer is yes, you accept that and then you change and you become better as a result. People who never change their mind and people who never grow are massively underestimating the complexity of the world we live in. And I am no exception to this rule. Neither are any of you. That is why you've seen Nick Shawn change slash evolve slash improve over the past couple of years. Does that make sense?
Yeah, yeah. It does. It does. I was also looking at the videos where you um, were helping people to essentially do compounding and stuff. Like you were taking a 1K account to 10K and then taking a 3K account to 15K, those videos at that time. And I was just trying to figure out like what happened, like what changed, and what things you saw that you changed from that to what you are now. And I was just trying to look at the journey, and I got a lot to learn from that. And yeah, it was great just looking back at things from that time.
Yeah, it's real cute. You'll also see a bunch of crazy stuff if you go to my Instagram back into like 2017 and 2018 as I was getting into like profitability and starting to like make a little bit of money. Like there's a post from like it was either 2017 or 2018 where I made like $300 for the day and I was like jumping up and down and I was all excited. I was like, I made $300 in one day this morning in like an hour, guys. And it's just funny to look back because like that mattered so much to me and that was a big breakthrough and I had never made $300 in a day before that, right? I would go to work at
Hmm.
Target making like $11.30 an hour. After tax it was like $9 an hour or less. I would make $80 all day working an 8-hour day. It came out to be about $8 an hour, a little bit more. That was my day. So to make like more than three times that much in like one morning trading, I was losing my fucking mind. If you would have told me back then, hey, bro, by the way, about 8 years from now, you will have a month where you make like $100,000 trading. I wouldn't have believed you. I would have been like, that's crazy. To make that even in a year would have been fucking insane. Because in a year, that's like 8 grand a month, which is about 2K a week. I would have been jumping up and down for that. But to think that I would have come this far and do it all, it just proves like I am somebody that's probably not any more intelligent on an IQ level than most of you on this call. Some of y'all are dumber than me, and some of y'all are smarter than me, but most of us are probably the same average intelligence. There's a reason we say it's average intelligence. If I can do it, a lot of other people can do it. Obviously, most people will still lose money trading because those are the cold hard facts. However, knowing that it's possible and having that belief, that is what serves people the best. It served me 8 years ago when I was nobody and nobody knew who I was and when I wasn't profitable trading, and it still serves me to this day. And I believe it will serve all of you guys. Even though you know the stats are very, very low, accept them and decide to continue knowing what the stats are. Having that belief that it is possible and that if you continue getting experience and bettering yourself over time, you'll become not only a better trader, but a better person.
Thank you so much for this.
Yeah, no problem, Mohit. We've got Craig up next. Craig, go for it.
Hey, Nick. So last week you were talking about there was a question someone asked about a currency pair that was not one of the majors. And so I'm wondering, like, which currency pairs are you watching typically, and how often do you take a look at them to see? Do you kind of say, oh, this one might go up or down or whatever, and so I'm going to watch it more frequently, maybe once per day or twice a day? What's kind of your time frame on what you're doing all that?
Yeah, great question. So you can screenshot it right here, take a picture of it. I'm screen sharing. You can just, it's all these pairs right here. These are what I watch. These are all of the currency pairs I look at. And so there they are. The second portion of that is how do I check them, right? So what I'll do is typically just because I literally have nothing fucking better to do, this is my whole life is like trading. I look at them every day, even if I know that we're like miles away from something good setting up. What that means is like we're probably a couple days to a week or two out from anything potentially even setting up. And even then it might not set up. So for these, I keep in my group called one. I've creatively named the groups 1, 2, and 3. For one, these are all the setups that I think are very likely to have a likelihood of playing out in the very near future. So that's NZD CHF, GBP CAD, if we make a new high, and then NZD JPY, right? I shared all of this analysis this morning. These are like the top tier, like quarterback on the football team, Chad level trades. The number two group is the trades where I'm like, okay, I don't really see anything from now into the near future, but they just have alerts in place. So that way, if something does set up, I'll be the first to know. Euro CHF, I've already got this marked up. I've got alerts here at 1 and 1.005. AUD CHF, same sort of thing. I've got an alert at a higher high. If it goes up there, I might look to sell, maybe, depending on the context. And then I just do this for all the pairs. I just click through them. I set alerts where I think would be like a good area to enter positions. AUD JPY if we make a higher high. But I put them down here in this one, knowing that we're kind of far out, like from them going. Like if AUD JPY goes up here, unless something crazy happens, this is probably going to take a couple days to maybe another week or two in some situations. So they're not something that I obsessively look at every day. I'll check them every day, like maybe like once, but that's just because literally like I have nothing better to do. Because this is my whole life, and I have a business around trading. But the ones that I'll actively be watching every day are the ones that I'll keep towards the top of the watch list. Stuff that I'm either already in trades on or stuff that I'm very likely to enter in the very near future. And I'm just kind of keeping my quote unquote finger on the proverbial pulse of the market by keeping them here at the top. So this should answer your question for what pairs do I look at and how often do I check them? Was that useful?
Yeah, that was great. Can I do a follow-up quick question?
Yeah, and take your
What are
time.
your,
Take your time. We're in no rush.
yeah,
Take your time.
okay. Just thinking about like news in these different countries. Do you look at that at all to see, oh, this is what's happening in Australia or whatever it is? Or do you not really care about that and just keep watching the chart?
So the answer is 99% of the time, no, I don't factor in news. And here's why. Unless it's some crazy shit like the COVID pandemic and prices dropping like 1,000 pips on one pair in one day, some crazy shit like that, or like a Brexit parliament vote when all that shit was happening, or like a US presidential election. These are things that are like not just is the Forex market going to move, everything is going to move, and it generally just causes mayhem. Outside of those outliers, which are for all intents and purposes very rare, 99% of the news events that you see on the economic calendar, all little CPI data releases, this and that. Some fucking person's giving a speech at the European Central Bank, and then over here, the Chinese inflation rate data came out. All this bullshit. It's just a bunch of news that may or may not cause volatility in the markets and a price spike one way or the other. The way I look at it is I know that even without all of the news, I've modeled it in back testing and forward testing for years. What I've seen is that one thing is true. Price just goes up or down. If you get into a trade and you think that, hold on, bro, the trade goods data for Japanese yen is coming out, and that means that we're going to have some increased data and the fluctuation could cause an increase of 32 pips on the yen. If you're doing all this shit, like all that matters is if you've entered, say, a buy thinking it's going to go up, the news is typically just an excuse for volatility to play out, meaning you're either going to be wrong very quickly, it's going to go straight into drawdown, going to hit your stop loss, or it will go into a big drawdown and then you enter, you add a position or you close, you do whatever the fuck your risk structure is, or it's going to spike into profit really quick. In my opinion, it doesn't make a lot of sense, just in my very humble opinion, not financial advice. It doesn't make a lot of sense to obsess over which directions these are going to go. Because if you're doing that, the indirect insinuation and assertion that you are making is that you can predict, for one, what the news release will be, and then number two, what the actual effect that news event will have on price is. And those are some big fucking assumptions that I've never seen anybody in my whole trading career. I will say it again. I have never seen anybody in my whole trading career able to predict that. I tried doing that shit for the last 6 months at the end of 2020, trying to become a better trader and improve my outlook on the fundamentals of the Forex market. It's a fucking shit show, dude. It's literally like a flip of the coin. You're better off, in my humble opinion, not telling you what to do, not financial advice, just a general suggestion for entertainment purposes only. You're better off just flipping a fucking coin, entering a buy and sell randomly on any pair, and then just letting it hit target or stop loss because you're going to have the same win rate as compared to trying to predict which way news is going to go, which is about 50%. For all these reasons, that is why I don't really worry about news 99% of the time. Does that make sense?
Yep, gotcha. Thank you.
Cool, man.
Yeah, that's great. Thanks, Nick.
Yeah, no problem, Craig. See you, brother.
All right.
Okay, so no more questions so far. We got 72 people on the call. This may be it, guys. The call may end here. That is, unless within the next 60 seconds, somebody just simply raises their hand to ask a question. I'll hang out here. We'll wait 60 seconds and I'll wait to see if anyone raises their hand. Then we can continue. I fucking knew it, dude. I saw you lean forward. I saw Duncan come up, step up to the plate. All right, go for it, man.
Hi. I think it's interesting to talk about trades that we're actually in. Uh, from an emotional point of view, I mean, I'm in a losing trade. That's not good. I'm seeing red numbers. So, have you got any tips how one deals with that situation when you're in a trade? You think it'll play out, but it's kind of going against you.
Hmm. Trying to think of something that will be like profound and something that will be sexy and something that will inspire a bunch of people to never be fearful about the trades again. Here's the simple answer, man. After you do it long enough, you stop giving a shit about the actual P&L for each individual outcome. That's it. So in your situation, if you know you're long-term profitable, which because I know you personally and you've, shown us your data and stuff, you are profitable, you have been profitable for the past few months. You are a person who knows that long term you're likely to continue generating a profit. However, the outcome of this specific trade and whatever specific trade you happen to be in at any given moment in time, yeah, you don't know what it's going to be, a win or a loss. The way I've always gotten around this feeling since I became self-aware of it and more mindful and more present is I've just said, you know what? If I allocate that amount of risk to that trade, then it's gonna go up or down. I'm gonna win or I'm gonna lose, and I've already defined that I'm comfortable losing if that happens. So if the outcome goes and it starts going into loss and it's going towards the stop loss, I'm like, okay, it is what it is. I entered that trade knowing what the risk was, knowing what I defined it to be, and that's okay, and I'm comfortable with that. For me, say on this trade that I'm in right now, right, it's $30,000 risk on NZD It's like halfway to the invalidation. It's currently floating in like a 15K drawdown right now. I'm good with it. It doesn't matter to me. I'm gonna have a lot of trades that win. I'm gonna have some trades that lose. I'm probably gonna make more than I lose long term because it's been the case for the past 6.5 years. For the trades where you're using like DCA and grid and like adding and drawdown as the risk structure, you just have to look at the balance of your account and ask yourself if you're comfortable blowing the account, because any of the next trades could blow the account. And while it is very rare and it's a small percentage of the time, if you're using quote unquote appropriate or reasonable sizing for the first entries, you still have to ask yourself, like, there's 10K in the account. I'm putting a zero point 0.1 lot size for this first trade, and I'm planning to add if it goes into drawdown, and it might end up being a two, three, four, $5,000 loss, or it could blow the account. If you're not just using hard stops and a set risk per trade, and you're using DCA as the risk structure, grid trading, recovery trading, adding and drawdown, you just have to look at the account balance and ask yourself if you're comfortable blowing the account and accepting that that's going to happen a percentage of the time. And once you accept those things, it kind of, I don't know, for me, it just doesn't fuck with me anymore. And I think it's likely to be the same thing for you with enough experience.
For me, it's about being sized appropriately, so I'm reasonably comfortable with the risk and letting it do what it needs to do.
So, Duncan, would you say that size matters?
Sure does in trading. Yeah.
And trading. Okay. Sweet. Sorry, yeah. Sorry.
Yeah.
Yeah, trading
Thank
for
you.
sure. Yeah, absolutely. All right, no more questions, no more hands raised. I'll wait for 60 seconds again. If anybody wants to raise their hand, ask a question, feel free. And if not, we will hop off. I will wait 60 seconds. Coleman, go for it, my friend.
Hey man, I was just you seem really well read and it's really intelligent as far as like your speaking and obviously with trading and stuff. I was wondering if there's any like books you recommend to read as like regarding personal development or trading, uh, either one really.
Hmm. So for one, thank you for saying that. I appreciate that. If I wake up in the morning and I've gotten good sleep and I have a little bit of caffeine, I'm fucking sharp as fuck, man. I'm sharp as a tack. I can communicate like effectively. The middle of the day, by the time I eat or have lunch, I'm fucking like there's like a brain fog. It's so weird. But anyway, thank you for saying that. So that's the first thing. Second thing, do you have any books I suggest about personal development or trading? Nothing that comes to the top of mind, because I've listened to a few audiobooks on trading, all the big ones, right? So Trading in the Zone by Mark Douglas, Best Loser Wins by Tom Hugard, but I didn't really learn anything new, probably because I didn't read them until like a year ago, and I had already learned to experience all of the concepts more or less in that book or in those books. So Best Loser Wins by Tom Hugard and Trading in the Zone by Mark Douglas. They're good, but they're not going to teach you anything new that you wouldn't already naturally learn through trading. And if anything, they might even introduce some concepts that might be conflicting or confusing, because you're then trying to put your intuitions and experience into rationalization frameworks using words and language and vocabulary and lexicon and dialectic conversations to try to put into words what it is you're feeling. But oftentimes you lose a lot of the nuance and the granularity and the texture of what your intuitions are saying by trying to put it into words. There are just some fucking things. It's a very inconvenient fact of reality that it is sometimes very difficult to put into words the way we actually feel. And in trading, if you try to do that, you end up doing weird shit on the charts. Like, you may have a feeling that price is going to drop, but because of your rationalization of no, but price is in an uptrend and there's higher highs and higher lows and there's a support zone here and it's supposed to bounce at support, so I'm going to enter a buy here. But then so you enter a buy, but it doesn't feel right. It doesn't align with what your intuitions are. That is something that you just have to learn through experience, and you have to learn to trust your judgment in that case. I will say, if I were to give you a resource for the way that I've learned a lot of my thinking patterns and thought patterns, it has been the past 4 years of listening to Sam Harris. So his podcast, what the fuck is it called? I forgot what it's called, but the Sam Harris podcast at samharris.org. He also has a YouTube channel. I've learned two things from him. One, a lot about what it really means to pay attention in the present moment with mindfulness and meditation, and the way that you think about things, the way that your beliefs impact your actions. It sounds woo woo. It sounds bullshit. I fucking guarantee you it's not. This guy is very well grounded in science. He's an atheist. He's not like religious or like anything like that. It's very well grounded in reason and evidence. And that's what I love about it. So I learned a lot of those things from him. The second thing that I think it's really helped me with, it's helped me with my communication. It's helped me put my thoughts into words in a better way by hearing the way that he describes things and the way that he speaks, his communication. It is fucking so targeted and specific. If I ever become like 1/10 as good as him at communicating, I will consider my life a success in that. But it really strokes my ego, man, that you've just told me that, I'm a good communicator and stuff. So yeah, I would say listen to the Sam Harris podcast, any of his podcasts. You don't even have to worry about the topics he's talking about. Listen to the way that he speaks and the way that he articulates himself. I have never fucking seen a better speaker and communicator than Sam Harris. I would really recommend that if you're looking for personal development.
Yes, sir. Thank you so much.
Absolutely. I feel like I rant also a lot, guys. So if you guys feel like I'm going too far off on a tangential bullshit thing, please, if you were the one that asked me the question, please say hey Nick, like just interrupt me. I'm okay with you interrupting me if you feel like I'm getting off track and not targeting the exact question. So just feel free to interrupt me if you feel like if you like the shit I'm saying and you feel like it's great, then sweet. I'll just keep talking. But if not, feel free to interrupt me. I don't want you guys to feel like I'm steamrolling here. But I just try to, the reason I go through these long-winded responses is I want this to be a valuable session for you guys. I want you to have a lot of context and nuance. I don't want you to just be like, Nick, why did you take that trade? And I'm like, because it made a higher high. Next question. I don't want it to be like boring, right? I want to make sure that you guys have plenty of info. So next up is Brandon.
What's going on, Nick? What's your take on Euro Pound
Let's look.
right now?
I am hoping she goes much lower so I can buy, but let's see where she's at. I haven't checked her since last week. Fuck yeah, bro. So here's where I have my alert. I have my alert at 845. Yeah, 845. That's where I think
Okay.
yeah. So I don't have it there because I think it will go there. I have that alert there because the way I approach it is if it does in fact go there, I might be maybe potentially looking to hopefully buy because generally after price makes a new low, as you've seen for the past few months in the Telegram channel and Nick's trades, price tend to just have a reversion. I think that would be a good location to buy. If not, that almost doesn't even look good anymore since we've ranged for a bit. I'm going to set an alert at 8.4 as well, and we'll see. So would I be selling right now? No, I probably wouldn't just because we're still technically in this long ass range we've been in since the beginning of the year. Would I buy? No, we've already tried to bounce here a couple times. We've tried to break the highs up here. We failed. Every time it's tried to get above it, it just fails and comes back. It's just in a range for now. There's really no direction, in my opinion. The best decision for me personally, not financial advice, would just be to wait for price to come lower down to here. And then at one of these prices, 0.845 or 0.84, one of these would be super sexy to buy because then you could have the stop loss spaced way far down here. And then any little tiny target is going to get hit very easily at a 1-to-1 risk reward ratio. Does this make sense?
Okay, cool. Yeah, that makes sense. Appreciate it.
Sweet, man. Well, I'm just curious, what were your thoughts before you asked me what my thoughts were?
Well, when I was looking at it, it seems like a key level of support where it's at right now. Um, it looks like a decent buy. But I understand your strategy is kind of to wait for pure exhaustion before you enter.
Mm-hmm.
But I mean, if I was looking at it, I probably would be looking to take a buy very soon. But 845 seems like a good level.
Sweet, man. Let's go into this a little bit more. So, what a lot of you all are thinking right now is you're like, Brandon's got a point, man. This shit isn't support. It's literally a clear support zone. Why the fuck shouldn't we buy? I'm gonna buy just to defy Nick because he thinks it's gonna go lower. Idiot. I'm gonna go. So here's the thing: support and resistance, you can draw them anywhere on the chart. Is this correct, Brandon?
Right. Yeah, you can.
So it is, by its very nature, subjective. Is that correct?
Correct.
So what this means is that since you can draw it anywhere and since it is subjective, I could draw a support resistance zone right now on any currency pair, anywhere on the chart, even at the current market price and say, yeah, it's at a resistance. If you look at the 15, we've bounced here a couple times, a 15-minute, a 5-minute, we've got a little bearish wick. I'm just going to sell right now. So you could essentially justify buying or selling anywhere at any time on any chart. And since that's the case, it is best to assume that support resistance, because of those two reasons, is about a 50-50 bet. It's a 50% chance it'll bounce, 50% chance it'll break. You still with me?
Yeah.
Cool. Since that's the case, the best way to use support resistance is to just take the trades you think are likely to work out. Like Brandon, if you think it's going to bounce here or you think it's at least worth taking a trade just to see what happens, yeah, sure. Buy, put a stop loss below, put a target wherever you want. 1-to-1 risk reward is usually a great place to start just because it gives you some metrics to work at. What you're going to notice is with enough time and with enough trades of just entering buys at support, sells at resistance, or just entering randomly, you're going to notice that you probably have around a 50% win rate. With that, what this does is this experience from seeing that happen, it allows you to quote unquote hone your trade selection. Because of this, it can then allow you to stay out of trades that you think are less likely to work. So you might see like, that's a support, yeah, but I think it's going to break, so I'm not going to take that trade. That only comes with experience. And by the same token, you may think, oh, this is a really good resistance level. I'm going to sell. And not only am I going to sell, instead of risking, say, like 10K or whatever, you might opt to risk like 15K or 20K because you think it's really, really good. And that is going to be by some mysterious principle that you can't inspect, which is all based purely on your intuition and experience. The great benefit to just buying at support, selling at resistance with a 1-to-1 risk reward ratio is the fact that it allows you to predictably do the same consistent thing over and over in order to get two things. Number one is data. Number two is experience. If you're getting that data and that experience, it allows you then in the future, given enough data and experience, like 6 to 12 months from now, usually, it allows you to start selecting trades that to take and selecting trades to stay out of. And that trade selection is what will do one of two things. Number one, it'll decrease your risk. Number two, it'll likely increase your win rate, therefore making you more profitable. So continue what you're doing, Brandon. Just pay attention to what the losers have in common and what the winners have in common. Eventually, further down the line, you will get that intuition. Hopefully, you have a 10% chance of doing this because 90% of people fail. But eventually, for some people, they get that intuition that then helps them stay out of shitty trades and then enter really good trades. That makes sense?
Gotcha. Yeah, that makes sense. Yeah, because I was looking at it. Excuse me, I was looking at it. It looked pretty good. I mean, not right now, but if it can go down a little bit further, I was looking at it to possibly take a buy.
Yeah. You'll be right half the time and wrong half the time. So just continue doing that. That's the fun part of this is since you're not profitable, you don't know. Like it is what it is, right? So and that's cool. Make sure you're trading on a demo account or like a microscopic live account where you're not worried about losing money or winning money. It just you're just doing it to get experience. And take whichever trades that you think you should take. Just watch what happens after all of them. That way it starts developing that intuition to where you can start saying like, yes, we're at support, but shit, we've already tried to bounce here once, twice. It's not now it came straight back with a huge bear candle. You can start thinking things like, shit, I think this is about to fucking break the zone. Therefore, I'm not going to buy. And because of that, you can end up taking less losses. And by that same token, the other side of the coin is that you can also start taking more wins, but you'll only learn that through experience. So the short answer is do whatever the fuck you want right now and just learn through the experience as you continue to accumulate that conglomerate of data and experience to help you make better trading decisions in the future.
Gotcha. So this is what probably a trade. A few months ago, you probably would have already entered this trade, right?
Uh, it's hard to say because it would depend on all the specifics, but like let's just say for the sake of the example, let's just say yes, sure.
No, I'm just saying this is one because the way you've restructured your strategy, you wait a little bit longer now. But prior to your strategy in the past, you would have already entered and then maybe added to it if it would have went to the 845.
Exactly. Correct.
Yeah.
Yeah, that is a correct statement.
Yeah,
Yeah.
but now you're waiting a little bit longer to get a better entry, which is a smart thing to do.
Yeah, that way I just make fuck tons more when I'm right because I can risk way more knowing the likelihood of it stopping out is very low. If it comes like if I enter here, look at how the risk structure is. Stop below the zone, targeted to 1-to-1. Half the time it'll bounce, hit the profit. Half the time it'll stop out and hit the stop loss. If I wait for it to come down here, say I enter there, and then I have a stop like wide down here, then a take profit at like a 1-to-1. If we're not even using support resistance, right? We're just using like price made a lower low, then a lower high, then a lower low, then a lower high. If it makes a lower low, it might push up somewhere here to make a lower high. That's the whole logic, right? So it's like
Right.
overextended.
Yeah.
That's why I wait now because two things happen. One, trade duration is typically shorter, the exception of an NZDCHF, the fucking bitch, for the past week. First reason it trades a lot shorter. Second thing is I can just risk so much more money because I know that it has a high chance of ending in either like a break even or a small profit or a huge profit.
Yeah, yeah, your strategy works for sure. I think with this trade, the NZD, the switch trade, I think the only thing that really affected us, and I understand, I know you don't look at it, but I think it was the news that affected that trade because that trade was going, it might have been it was in profit, I think. Yeah, it was in profit about I don't know, maybe like 15 pips or so, 20 pips. And then the news came, and then it started back going in the other direction. But it was definitely a good trade until the news kind of affected it, which that is nothing you can do about that. You know what I mean? The news is the news. It is what it is. Um, but I see your overall strategy. It definitely works. I mean, it makes sense. No market is just gonna go parabolic, forever. There's always going to be some type of reversal, and even if there is a reversal, it'll be a small enough reversal to where it's still a large amount of pips, you know, just based on the 4 hour or the daily.
You and me are in the same canoe, rowing on our rowboat to Pip Island, man. I am in complete agreement.
Yeah, because I mean, even if you put a fucking, and I understand, I don't know if you do this or not. I'm sure you've probably done this before. Like if you put a fib on like the 4 hour, like on the NZD, and just look for what the 3.8, like a 30% retracement, dude. I mean, that's I think that's like 100 pips, if not more.
Yeah, that would be like right here, which would be like yeah, like 100, 890, 100 pips. Yeah. Yeah.
90, yeah, yeah, yeah. And that's just a 30% retracement.
Mhm.
Most people look for what, 50,
50 is a good
somewhere
rule of
around
thumb.
there.
What I do is I look at the previous structure. So if it goes up, it pulls back this far, goes up again, pulls back this far. These two highs were kind of the same thing. So I'll just start it there. Then it goes up again. Then I'm like, okay, based on the recent price data, how far back is it likely to pull? For me, I did like about 50%. So that's still
Yeah,
where my
yeah,
current target sits. But yeah, like you said, if you get a really good fucking entry, you can have your stop way the fuck like up here. I mean, let's just do
yeah, right.
like say it goes up here where I may or may not add at 0.565, right? If you have the stop up here, say it's 100 pips, look at this little itty bitty adorable cute target. Like it barely has to go for this
Yes,
target.
yes. I get it. I totally understand it. I mean, the strategy definitely works for sure. It's just sometimes you're gonna have hiccups with the fucking news that kind of it was going in our direction. It was at least pulling back. It probably would have pulled back at least 30%. And then the news came and affected it. But other than the news, this trade, I think we would be in profit still.
Yeah,
Or
this
halfway.
Yeah, that spike there was the news. And again, this is why I don't worry about news because this is going up, right? There's a 92% chance statistically that I'm either going to get out of this at break even or some sort of profit. That's even with this shit happening. But keep in mind, if that news event had been just the opposite and it would have spiked down here really quick into
Oh man,
profit,
that would have been,
yeah, we
yeah,
would have
we
been,
would have been in profit. So that's what I'm saying. I understand the news is, look, it's 50-50 for the news. And I understand that's why you don't look at it. But yeah, I mean, I understand your strategy. I really do. It definitely works. For sure it works. Yeah, it just makes sense. Are you going to get some pairs that just go parabolic against you? You're going to get a few of them a year, probably, yes. But the likelihood of it at least reversing or reverting back to at least a 30% mean is extremely, extremely high when it's gone so far extended.
this is why I just wait for those trades because they're so easy. There's just like taking candy from a baby, bro.
Yeah, yeah, they are. It really is for sure. I definitely see it, Nick. I mean, I appreciate your help, man, because you definitely the past I think I've been with you now for about, I don't know, maybe like 2 months or so, but you've definitely opened my eyes for sure. And just to be patient, you know. Now, see, now if I wasn't with you, I would be in the euro pound trade right now.
Yeah.
I would be in it right now, you know, and not I wouldn't be as patient right now. That's for sure.
I'm glad I'm helping you conquer your inner bitch, bro.
Yeah, yeah, for sure.
Sweet, man. All right.
Yeah, man, I really appreciate it for sure. Thanks for your help.
No problem, brother. All right. Next up, we've got Space Monkey again.
Hey Nick, my question is FOMO, or like you see what the trade's gonna do, and you kind of like you feel like you miss the trade. So like, talking about gold and how it went down, and I'm just thinking I could have just kept selling, but I was afraid it might retrace up.
I share your sentiment. So here's how you're feeling. You're feeling like, yeah, mate, if it goes up a little bit further, I'm going to sell up there and then I'm going to get a really good entry. And then if it falls, I'm going to make a lot of profit. That's what you're thinking, right?
No, I was thinking like it already went down to 390, and I could have just sold from there, but I was afraid that I missed the sell already because I didn't get a perfect entry.
So you
If that
you were
makes
just were you wanting to enter up here?
No, I wanted to enter at 390.
There's a bunch of fucking places where it was 390. It was all back in here, or it was all this. So
Oh,
where is it?
2390, 2390.
There's a bunch of there's here, there's here, there's here, there's
Oh,
here.
the leg down pretty much.
Okay, so as it was going down, you wanted to enter a
Yep.
sell. Okay. And then you didn't. The reason was
Because I don't know if it was a real like going down, or I feel like I missed the correct position
what would have been the
because
risk?
I don't want to put my stop loss all the way at, you know, 2400. So it's kind of like,
I'm not seeing a structure here. So what would have been your risk structure or risk planning and like the risk per trade, the stop loss? Like tell me about the risk structure. If you would have entered here, 2390, where would the stop have gone?
2400.
And why would you have put it at 2400?
It's, I think it was a support level or something.
So your trade would have looked like this?
Yeah, something like that.
Well, I mean, that's fine. Yeah, you could do it. With essentially when doing stuff like that with the stop that tight, you are betting on the momentum continuing without any reversion or pullback whatsoever. And when you do that, when you have wins, they'll be nice and big, but you will lose more than half of the time from my experience. And from my experience, significantly more than half the time. You'll have shit go into like huge profit halfway to the target, come all the way back, take out the stop just to fucking bounce up here, and people will say it's a head and shoulders, bro. Then it goes back down, and it's a fucking mess of a way to trade. But that's just my opinion, right? And that may work for you. And everyone has individual ways that we trade. It's hard for me to reason with like the risk structure you're using, and it's hard for me to like understand why you're trading. Here's all I'll say: if you think price is going to go up or down, buy or sell respectively, and just make sure you do it with a controlled a risk structure that you defined with a risk that you're comfortable with. As long as you do those things, for fuck's sake, might just use demo or a small live account, and then just continue getting more experience over time. As you continue to get better, it's kind of silly to say like as you get better at trading, you will get better at trading. So just continue letting it go. But yeah, continue taking trades you think should take with a controlled risk structure. What's up?
So there's no like what, just tell your emotions to like shut up and just say you missed the trade, or would you like suggest don't even try to get into it? Because I just didn't try to get into it because I'd probably lose. That's pretty much why. But this one instance, I would have won.
Yeah. Let me let me explain this in like a more general sense. You're in a position where you're like, okay, Nick, what do you do when you have the fear of missing out? There is a trade that you could have maybe potentially taken, but now it's sort of too far. So the stop loss and the risk structure will be fucked up and it doesn't look very viable and doesn't seem like a good idea, even though your emotions still want you to enter. Is this what you're experiencing?
Yeah, like my intuition pretty much tells me it's gonna drop, but my head is like, you're a dumb cunt if you actually try to get into this because you could be like killed so easily. So it's kind of just experience, I guess. You gotta
Yeah.
pick your battles.
In short, yes, it's experience, but more specifically, more practically, as it applies to your situation, it is the fact that there is a disconnect between the outcome you think is going to occur, which we just call your intuition, and your actual action, which is something's telling you like, the stop loss there wouldn't work and it wouldn't be a good idea and this is stupid and you literally said it'd be like dumb fuck, that all this shit is not aligned. If it were truly a great trading opportunity and if the time was right and everything was all like aligned per se, you wouldn't be feeling any of this. You would be saying, "Oh yeah, this is a great trade. Let me take it." Then you would take the trade, put the invalidation or stop loss and then put the target. Then you'd be off to the races. The fact that there's like a disconnect, there's a weird conflict of emotions, it's generally just when it's too complicated or too hard or too weird like that, I just turn my back on the trade. I'll walk the other way because I know for every 5, 10 trades like that, there will be one really good trade where I cannot find a reason not to take it. I would almost be thinking like, man, it would be stupid to not take this trade because of how great the entry is, how great the risk structure is, how confident I am in the outcome actually occurring as a result of my experience. When all those things are in place, there's no doubt your intuition and your actions align. When it's that case, your intuition and your actions align 100%. And I would just wait for trades like that. This trade on gold is clearly not the case. So continue waiting for a trade that is not a dumbass trade.
All right. Cheers, man.
Yeah, cheers, bro. Up next, we have Saba. Saba, go ahead.
Hi, Nick. Can you hear me?
Yes.
So the question is, you have a lot of modifications when you trade. You might add or you might cut the losses short. Do you have any anxieties when you go to sleep and you're not able to do those stuff? For example, you enter a trade and then you go to sleep and you could have made more or lost less. And then you have anxieties and yours probably you don't have it. But how do you not have it? Because when I go to sleep, I wake up at like 7 a.m. or like 6 a.m. How's the trade going? Is it going good? Is it going bad? I don't know what to do. This kind of stuff. How do you deal with this?
Okay, so the question is, Nick, whenever you're in a trade and it's overnight where you're going to be fucking asleep and there's nothing you can do to manage it or close it or add or anything, do you worry, Nick? Do you have an anxiety that you're not gonna be able to do something and something's gonna get fucked up? The answer is no, but that's just because I've been doing this for so long that like I understand within all practicality and reason, I am not going to be a person that is awake 24 hours a day, 5 days a week to trade. It's just not realistic, right? I'd say I trade for freedom. Imagine if I stayed awake 24 hours a day, 5 days a week. That would certainly not be my definition of freedom. Now, just because that is the case doesn't mean I have anxiety about it. I don't have anxiety about it. I accept that there's going to be many times, and it has happened, and it will continue to happen, where price goes up to the exact area I was potentially considering entering, and then it would have been perfect. It would have got a perfect entry, and then it would have fallen from there, and everything would have been amazing. But it didn't happen because I was asleep and I was not able to actually take an action and manage the trade. There is nothing that me or you can do about that except for staying awake 24 hours a day for most of the trading week. And just to give you an example of this actually happening, if you scroll back through the Knicks trades group, I believe it was about 2 months ago, there was a Euro USD trade that I had planned out, sent all the analysis, the exact entry, where everything would be. It was for a buy and it literally would have played out perfectly. It went right to the entry, would have shot up. I would have made however much I said, however much I said I risked 30, 40, 50, 60K. It would have been a huge winner, but I missed it for the one simple, stupid, fucking technical reason of I was just asleep and I didn't get the entry. And I don't like setting limit orders and pending orders because it doesn't allow me to examine the context at the moment price gets to the location I'm considering entering. I only use market orders and I'll set the alerts at where I'm considering entering. That way I can go and check and see if there's any crazy spikes or news events that are releasing at that time. And I'll get a quote unquote feel to make sure everything quote unquote still looks good. Then I'll manually decide right then to enter. That's why I don't use limit orders. So I missed that trade on Euro USD. Was I anxious going to sleep? I wasn't, just because I've been through this so many times that like I just know what happens. I know what the stats are. I know there's shit that I'm gonna miss. I know there's gonna be management decisions I'm not able to make because I'm asleep. There's gonna be trades I don't take. There's gonna be trades that I do take that I FOMO into a little bit early because I'm afraid I might miss the entry at night. All of that shit's gonna happen. The way that you get around this, my friend, is you just continue to get more experience. It's kind of funny because I pretty much say that about everything, but don't underestimate that. That is truly the case. If you're feeling anxious because you're going to sleep, and you still have a trade open, and you're wondering whether or not you'd be able to do something, you're going to miss it. And like, oh shit, oh my God, accept it. Say, you know what? I'm fearful right now. I'm anxious right now, and that's okay. Otherwise, the only other alternative is to stay awake 24 hours a day, 5 days a week, which something tells me you're not going to do. Is that correct?
Yes, I see. Thank you, man.
Yeah, no problem, brother. I'll see you, man. Next up, we have Brandon.
Hey, Nick, it's looking like there's a lot of pairs this week that could possibly line up for trades. So, what are your thoughts on? I know you sent out a few of them, but I'm looking at Euro NZD, um, possibly, Pound USD, possibly. There's a lot of the pound pairs could possibly line up.
Yeah.
Um,
So due to the subjectivity of this, like how many pairs would set up? Like, right, it just all depends on each of our own little nuances and specifics of our trading approaches. For me personally, the ones I sent out this morning, these are my top three. Everything else, in my opinion, for what I'm trading, is just looks kind of far away. Euro NZD would have to go all the fucking way down here to 1.745 before I'd consider maybe taking a buy. That is 200
okay,
pips away. Do I expect
I
that to
got you.
happen
Okay.
this week? I don't know if it could happen this week. It might, maybe, but I don't know. Euro NZD kind of far away, but that's just for me. Again, do whatever you want. Just collect the data, get the experience, track the results. That's what'll help you long term. But yeah, it does look like there's a lot more good opportunities this week as compared to like the past month, which was kind of it was a 3 week period. I didn't take a single trade because everything was going sideways.
Yeah, yeah. And so you were looking at let me pull it up. Which ones were you looking at?
They're here on my screen, the top three here.
Top three. Oh, okay, okay. Pound CAD, NZD. Okay. All right, cool. The only thing with the and I know you spoke about it in your what you had put out in the Discord. The yen, man. Like what are your thoughts on the yen?
Very broad question. Here's my
You're
thought on,
not afraid of the yen?
do you take me to be a complete fucking bitch? You think I'm afraid of a currency, bro? No, I'm not afraid of the yen. Um, it's just another currency pair. Here's my thoughts on specifically NZD JPY, New Zealand dollar Japanese yen. I think this presents the best risk structure because we've already cracked the high. We're already continuing up. So if it does continue up to, for me, it's just 0.98. That's what I think would be quote unquote good enough to take a sell. I think that would present a great risk structure for the trade because it would look like this. I would have a stop probably like even further up there. This gives us two more levels for it to go past, like 0.999 and then 100. And then the target is just a simple 1-to-1, which for you, we'll use your funny little Fibonacci retracement thing. It would not even have to go back to 50%. It'd be like a 40% move of the previous impulse up. This would be a very easy trade, but it would only be a very easy trade if it sets up. And for that to happen, we need a continuation push to 150 pips further higher to 0.998. At that location, I will be looking to sell. Why? Because I am no bitch. Brandon, are you still alive? Either you don't want to say anything or you're just,
Oh, I was on mute. My fault. I
yeah,
was talking the whole time on mute. No, so I'm marking up my chart. So I was looking at 97900. That's what you're looking at, 97900.
No, 9.8. I just have the alerts a little bit
Oh,
before the
98.
round
Okay.
numbers. I always have the alerts like 5, 10 pips below the round number because just in that case, because sometimes it won't all go all the way there. It'll get right before it or the spread won't hit it or something. So like let's say I was looking to sell at like 99, the alert would be at like 98.95 or some shit like that, just to make sure that I'm notified once it's getting close to the level.
I got you. I got you. Okay. All right. So I set my alert as well. And do you look at, so you also look at the structure, right? Before you take a overextended trade. You look at the overall structure of the pair, right? as far as if it's creating higher highs, higher lows, lower lows, lower highs.
Yes. So, and I'm glad you defined that because structure can mean
Because
something.
some pairs move in like consolidation, push up, or consolidation, down, consolidation down.
Here's what I mean by structure. I look at the where price is currently at, then I go look back at the recent higher highs and higher lows, or just highs and lows, and I look at where they're at in context. In
Okay,
context
yeah.
here, we have a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. If we go up here and make a higher high, I'm not a genius for just saying like, well, but I think it'll fall, and then maybe it'll go down here and make a higher low. So it's like, yeah, I do look at the quote unquote structure, if by that
Okay.
you mean these highs and lows that are recent.
Yeah, highs and lows. Yeah.
Yeah.
Because some pairs don't move like that though.
Yeah, some pairs do this shit like this where it's like up, then sideways, then up,
Yeah, yeah.
and sideways. Those are harder to trade because as they do these overextensions, right? If you're selling up here, but like this shit doesn't like it doesn't have any evidence in the past that it like has pullbacks like that. You're selling up here when what's more likely to happen, in my very humble opinion, out of pure subjectivity and cookie cutter cherry picked trading opportunities, this would probably be more likely to just continue rocketing up just because there's been no evidence there's been pullbacks. When you have clear pullbacks first, that is what makes the trades quote unquote more sexy whenever you have the pullbacks like these. But yeah, whenever you have pairs like that where it's just ranging, it goes up, ranges, goes up, ranges, it's just more of a pain in the ass to like structure. So I say no because I am no
And
bit.
and also so from right off, I guess, do you know right offhand what pairs are those pairs that you kind of stay away from?
The
Like
answer,
in today's market.
oh, well, yeah, we can look at today. Like, yeah, let's go look, right? We'll go to the 1 hour because that kind of encapsulates a decent enough amount of data. We just gotta kind of got to click through. Let's see here. Euro CHF looks decent. CHF 80 CAD. This looks kind of like a weird one. Like, look,
Yeah,
80,
it does.
80, like up, right? There's no real pullback. So even after
Yeah,
that shit, like tiny little pullback, then it just kept hammering up. So yeah,
yeah. Okay.
certain
So
markets they'll do it.
AU NZD.
This is why it's better to wait for shit where it's like clear pullbacks. The best trade of my trading career up to this point was Euro CHF where I made $50,000 in that one trade in like a few hours. And I'm trying to find this just
I
so
thought it was the yen. I thought it was GJ too, right? You
that
did pretty good on that one.
I don't remember.
GJ was it might have been maybe about a month or so ago. It went into profit like right away, and you caught it like at the top, the very very top. Like you got a good entry on it too.
That might have been AJ, but I'm not sure. But what I do know is the one that I've made like the highest dollar amount in a single trade was a Euro CHF. And here's why. With this structure, it's done nothing but just go up and down and up and down and up and down. And then where it got really good is it went up here far,
Mm-hmm.
big pullback, made a higher high, big pullback. Then it made another huge higher high. This is that one that was like the best trade of my career. I sold right here at the top when it made a higher high. And then I had the target way. It was pretty much like this. It was actually the target was down here, stop was up here. And then I closed just before the target. So instead of making 60K, I closed down here once it started going sideways for 50K. But what was the whole analysis? It was just that same predictable kind of back and forth upward zigzag, right?
After a higher high, that's when you're looking to an overextended higher high, and
Yeah.
you're looking for basically a pullback, which is very significant on a 4 hour time frame or 1 hour time frame.
Yeah, maybe more so than like the 5 second chart. Yeah, it's a little bit more relevant.
Right. Yeah.
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 Okay. Cool, man.
So NZD is one of the ones that you kind of is you would stay away from as of right now, the market structure right now.
This looks decent, actually. I actually no, this looks decent. Here's why I'm not taking this, right? Lower low, lower high, lower low, lower high. Yes, they're shorter lived pullbacks. They're not like as crazy deep, but this is extended really far. If I had taken this, which for some reason I didn't, right? There was reasons I'm sure, but for some reason it didn't look good enough to me. If this was going to have a lurch upwards and a pullback, I feel like it already would have happened. The fact that price has already tried a couple times to go up and it keeps failing to like lurch upwards, just going sideways, that tells me there's no buyers in here. Everybody's dead. There's no fucking buyers. So what would be more likely in this case would be to just wait for it to continue lower. And then if that occurs, let's go and glance at the
It would
previous.
have to go way lower though,
Yeah,
from the looks of it.
yeah, there's no recent support resistance to reference, so I would just have to use a round number. So like somewhere like that
Yeah.
far, and where does that happen to be? I don't
Yeah,
know,
that's far. That's too fucking far.
like 1.07 or 1 point maybe 0745 or some shit like this in here. If that happened, it would create a good risk structure because like say it goes that far, right, with no real pullback, if it can come all the way down into a zone like this, I mean, even if you buy at like the first zone, right? You could buy up here. If your stop is like all the fucking way below that zone, you got plenty of room. You're not smothering the trade. It has plenty of room to go a little bit deeper before reverting. But even if the target's just a 1-to-1, like that's what, maybe like a 50% move of the previous impulse down. And if it's that big
Yeah.
of a move down, you're probably going to end in some amount of profit. Even if it just goes up here, like maybe 70% of the way to the target, and then you just close there. And if you risk 10K, instead of making 10K, maybe you make 7K instead. But something like this would present a better risk structure.
Got you. Okay. And then also, do you remember like what was your like worst trade? I'm sure you that it stands out to you, like your worst trade of all time, where you're like, fuck,
Yeah. Had CHF in December of 2022. I lost like fucking 60 grand over the course of over a month on that.
wow,
Yeah.
okay.
Yeah. Fuck that pair. I don't really like talking about it. It's very sad.
But when you look back at it, is it something that you could have done differently or just not traded at all?
Obviously, there's things we could do differently. Is there anything that I would have done differently? No, I did everything quote unquote right. I did everything I would have normally done. It was just during Christmas period, spreads get wide, liquidity is much lower, so price ranges and goes sideways much more. You're paying stupid swap fees. It's just, and then that pair is not even known for having nice trends until this year, to begin with. So it was just a bunch of bullshit. But yeah, there wasn't really anything I learned from it. Maybe I just learned like don't trade the last 2 weeks of December, but even then, I've still traded the last 2 weeks of December most years and still done fine. So it's random.
Got you. All right. Appreciate it, Nick.
No problem, man. All right, we're gonna end this live session with Chris. Chris, we're waiting for your amazing questions. We're right here. We've saved the best for the last, so we know this is going to be profound. It's going to be inspiring. It's going to be motivational. Chris, please continue. We're all waiting.
Hi, Nick. Thanks for the opportunity. So yeah, it might not be very inspiring or anything. It's more technical. So those trades like the current NZD CHF tends to go on for days, if not weeks at a time. And obviously swaps can be somewhat of an issue. But when you have a pair like NZD CHF that has a positive swap for the long side, do you ever consider like going hedging your position before the spread goes wild at the close, or and just cutting the hedge like an hour after the reopen, so you don't miss anything basically, and you just at least somewhat reduce the swap fees?
So the answer is no. However, I understand you and why you would think that, and that does make logical sense. My only issue with that is two things. Number one, it increases the complexity. That's very scary because then you have to remember to do that every time. And it might almost be better to just like close the position instead of adding a hedge position. Because then not only are you paying commissions, but now you're paying swaps on one, but getting swaps on another. So it's net zero. So it's the same shit as just closing the position. But then if you're hedged, what if you hedge, then immediately it starts dropping. Now the dollar amount loss from that hedge position that you bought on, that is going to be much bigger than any fucking amount of swap fees that you have, which the swap fees will generally just be a couple pips worth of price movement, depending on the situations and interest rates, obviously. But doing all that, it adds complexity. And the second thing is just because it could reverse immediately after the session changeover, but the spreads are too fucking high for you to close and manage it. So now it ends up being this shit show of a thing where it could drop and go into huge profit, just like you thought it would. But now you got into this hedge trying to save the little fucking tiny amount from the swap fees. In my opinion, it is akin to like stepping over $100 bills to pick up pennies. It's just not worth doing, but that's just my opinion. I could be wrong. It makes sense, but I just don't do it for those reasons.
No, it makes perfect sense, actually. Thanks for the opportunity again, Nick, and good luck with the trades.
Yeah, absolutely. Good luck with your trades too, man. I'm hoping I don't lose my ass here, man. I'm hoping I don't fucking go broke.
Yeah, same here, buddy.
All right, sweet. Sasha, it was good to see you, man. It's good to see you on this call too. It's fucking every time we get on a call, Sasha's like fucking smiling, laughing about everything. He's just such a good person to be around. Sasha's like he's got his fucking light filtered glasses. Good shit, bro. All right, y'all. I had a lot of fun. This was a great live session. A recording will be uploaded to YouTube after this finishes processing. I bid you all adieu.
Bye.
See you guys.
Have a good day.
Cheers. Take care.